Hello, everyone. Welcome to week 4 of the Don't Blow It, Flip My Tax Refund webinar series. And I'm excited because we're already 4 weeks in, and that has been so exciting. So we had a little delay here getting started, but hopefully everyone is still tapped in. And I'm just excited to recap what we've been doing over the last couple of weeks and then to get right into what should you be doing with your refunds. So, uh, basically, we just want to talk about, get right into talking about what you should be doing with your refund versus what most people do. So let's just recap. So this is the just-in-time tax service, and we offer accounting services, loan documentation, payroll. We're a full-service accounting firm. And a lot of times what happens is we see clients during the tax season, and we're always trying to give out information that small business owners and individuals can use throughout the tax year to be able to limit their tax liability and keep more money in their pockets. So we're all about not just making money, but being able to keep it and turning it into assets. So one of the reasons why we're doing this series is just because of that, is to basically take things like tax refunds and use them to create additional revenue streams and to create assets for our clients. So over the last couple of weeks, the first week we talked about money mindset, and that before you get into having a plan of what to do with money, then you also have to make sure that you have the right mindset in order to go into this. A lot of people see Instagram overnight successes, or people who have flipped their money, or a whole bunch of these do this, not that, gain 5, 6, 7 6, 7, income, revenue. Everyone's saying that, right? Like they want everybody to earn all this money. But what we're not talking about is how do you get there? And how you get there always starts with mindset. Always. What are you thinking about? How do you think about money? Where does, money come from? What does it mean to, have revenue, different revenue streams? What are assets? What are liabilities? What does making 6 or 7 figures look like? And like I said earlier, how much of that are you actually keeping, using in cash flow, and then also using to create more money and more assets? So that's what we talked about in week 1, was money mindset. Generation, we talked about the generational ideas around money and how people perceive money also has to do with how you spend money. So we talked about kind of getting your mind right and, trying to figure out what was the things that you learned when you first learned about finances, money, budget, spending. Where did that come from? And have you dealt with those generational financial traumas, and how are you dealing with them now? Or what do you need to be able to have a better mindset? We also talked about how much it costs to live, and for people to go back and kind of figure out, because people live in all different cities and states. That's another reason why you can't really follow Instagram, because what works for someone in a certain area with a certain cost of living might not work for someone somewhere else. However, the internet is great because we can collect revenue and resources now from the whole world. So we're not stuck to, one revenue stream in my state. But when you talk about the cost of living and you talk about budgeting and spending, it's very important for you as an individual to find out what your cost of living is compared to someone else's, because 6 figures for you might look different than someone else, and depending on where that person lives, or where you want to live in the future. So also, as financial goals, you have to really consider we talked about comfortability, like what is comfortable to you might not be comfortable to someone else. And we talked a lot to roll into that. We also talked about people have to thrive and set goals and live off of what their comfort zones are and not the comfort of other people. I have some clients who make very little money, but the way that they spend and the way that they enjoy their life makes them, much more happier in terms of, how they deal with money and their comfort level and their stress level than maybe some other clients who might even make more than those clients, but because they don't feel personally comfortable with their finances, then they can be a little bit more stressed out. So when it comes to financial health and mindset, we also have to think about what is comfortable for you. So we talked about that. Week 2, we talked about financial literacy and some terms around assets and liabilities. So we did ask that everyone go around and look at what type of assets that they already own. Even if you don't own a home, then if you have something that has value, you could kind of add that up. We talked about different apps you can use that keep track of your assets and liabilities. And we did some calculations around net worth so that people can calculate and track their net worth. So I'm hoping that some of you guys did that, and now you are much more savvy around what your net worth is, and your number. And basically, the reason why we talk about net worth is because that number is where you should meet your goals. If you think that you need additional assets in order to increase your net worth for generation, then you feel like enough assets, then maybe you need to change some things around, allocate some things, or just talk about what other things you could be doing with the assets you already have. If you need to, for instance, purchase a home, could you liquidate some assets in order for down payments? Different things like that we talked about. In week 3, we pretty much talked about different things you can do. So we started actually getting into tax refunds and what were the main 3 concepts around what we would discuss in tax refunds. And one of those concepts we talked about was investments. So that would include, stocks, bonds, mutual funds, certain savings accounts, certain insurance accounts that everybody's talking about here on Instagram and TikTok, and just different things that you can do to invest in short-term or long-term with your tax refund that can create some of that cash flow and or create an asset to meet you a little bit further to your goals, to your financial goals. At investments was number 1. Number 2, we talked about creating businesses. So, this idea that everyone could just create a business. We kind of went into that and said, no, sometimes certain businesses are not for everyone. And the best success that you might have at business is doing what you love and being able to capitalize on that. And then also choosing businesses where you understand where your weaknesses are so that you can hire out or gain knowledge around the things that you go into business, and where you're weak, you can make sure that you find other people with the strengths you don't have, and you focus on your strengths. So we just dived in a little bit about what it means and how you should think about choosing a business that you choose in terms of, how you feel, and, even if it's spiritual for you, and how it connects to you in a way where you can serve. And one of the things about businesses is that just remember, you're always solving a problem. So your customer, your client, they're coming to you to solve a problem. So make sure that you really can identify in your business what problem you're solving, because that's the first step into understanding also what your worth is to your clients, and also how much you're going to put out there for, how much you will get paid for that service or for that product, is knowing how much you are worth when you come to the table with whatever you have to offer. And just talking a little bit more about some of the things that are required in business. So the third thing that we talked about using your tax refund for is real estate. And real estate is an investment. Businesses technically are investments. So all of these things are investments. However, we just kind of broke them down into 3 different types of investments. And real estate obviously is on the top of the financial asset list because it has a unique way of being a part of 3 areas of creating financial wealth. So one of them is in the equity. So if you purchase real estate and you get a decent deal or a good deal, I mean, if it is a seller's market and you're buying at the top of the market, then you could get in a situation where you don't necessarily find a great deal with equity. But if you sign up for additional tax planning and things like that, then we could talk a little bit more about what that might mean in terms of making sure you're choosing a property that has a decent loan to value. So, and loan to value is basically the amount of equity that you are going in to the property when at the time of purchase. So that's very important. So that's one of the things that real estate brings, is that immediate equity. So you could walk into a property and already have equity. And equity in real estate is the net value of your asset. So remember, we talked about those assets, and the liability is the loan. So if you have a mortgage, then that means you owe someone, and the value of your house minus the amount that you have in a loan at that time will be your net value for your home or your equity. And the equity portion is what the house is the asset itself, but just always remember, even assets come with a net value. So people don't understand that. You got to take those liabilities out to get down to that net value. So that's the first thing that real estate has to offer. The second thing is that there is tax advantages with owning real estate, whether it is a single family or whether it is rental property. For the sake of tax planning and tax strategies, then rental properties are not obviously, but they can bring additional tax savings that owning a single family home or personal residence can bring. So in real estate, you can earn some really cool tax saving strategies. And then the third one is, if you get into rental real estate, then it brings cash flow. So you have equity, you have tax savings, and you have cash flow when it comes to if you ever have commercial real estate or rental real estate. And that's why that's one of the main things you'll always hear a lot of financial advisors or other people who talk about building financial wealth and why they consider real estate to be so important. They never really break it down like that. So I'm hoping that gives people more insight on why real estate is considered to be more advantageous than some of the other things that we have talked about. Investments can be, but the market can be up and down. Real estate market can be up and down as well. Businesses, we have our seasons. So they all, some of them all have a risk. But, like as we talked about last week, there's each one of them have advantageous risk that, basically, again, you have to think about what is good for you. Some people love investments, passive investments like stocks and bonds and certain, syndications, things like that, because it's very hands off. It's what we call residual income, because, you don't have to necessarily what we call materially participate, meaning that you don't have to spend your man hours to produce the cash flow or dividends or any of the things that come out of those type of investments. You just, put your money in, whatever risk level you have, and the money kind of makes, works for itself. You do have to, to me, you have to continuously research what's going on in the market. I think people should be aware of, what they have. And again, that net value, you can't just like leave it and turn around and walk away. So there is a little bit of, sweat equity you got to put in it, but it's very, very minimal. And then businesses, it depends on the business you get into, right? You can get into business where you're working 40, 50, 60 hours a week. There was a time in my business where that was very true for me. So businesses can, have a lot of sweat equity in them. They can, the turnaround of cash flow is infinite because you really are the ones setting your cash flow. And you really are determining in businesses how much hours you're putting in and how much you're putting in, which is a little different, obviously, in what we just talked about in some other investing where that's not the case. So businesses can be advantageous for multiple reasons, right? Taxes, tax advantages, as well as time management, setting your own sales goals, things like that, where other investments, like we talked about, the market controls that. So the market does control some business, especially with products, but not as much. So, you see the differences there between some silent investments versus, actual business. And then real estate is interesting because real estate has, the best of both worlds, right? Rental income, especially if you have a managed property, somehow, has some of that passive income, especially if it's long-term rentals. The IRS deems it as passive income. And passive incomes means that you're not participating. You're not putting as much sweat equity into it. So therefore, it's, considered a passive activity. If you have Airbnb, that's different because it's basically labeled that way as a short-term rental. You might hear all these reasons why Airbnb is labeled different. It's because you're expected to put in man hours for that, right? If you have to provide additional services to your renters, then the IRS is obviously saying that, and that means that you're putting more sweat equity, you're putting more time into it. Now, again, rentals can be just like short-term or long-term rentals could be just like business, where it's great because you get to set your time. You get to say how much time you're going to spend in your business. A lot of times you get to set what your rental fees are. I mean, they are, the market does have an influence on it, but it's not set. Like in investments, you can't tell Apple or Coca-Cola how much to sell their product for. But when it comes to business and real estate, you are the one who gets to set that. So that's why we talk about how some of them are different, because there's differences in where you can have influence and where you don't have influence. So real estate, again, has some of the best of that, because you even though it could become passive for you, you also kind of set the limits on your rents and sales, and you can see whether or not you have your return on your investment, your margins, your cash flow. So that's basically what happens in real estate. So this week we are going, that's what we talked about last week, is those three things that I want you to focus on and pick a track. So basically, if you are interested in more passive income, then you want to choose investments. If you're interested in pretty much infinite flows of cash flow, and you have the time and the man hours to put into creating a business, then your track would be in business. And the third one is, if you've wanted to get into real estate and you feel like you want to get into real estate passively, then you could create long-term real estate. And then actively, you could create short-term real estate. And also, you could purchase real estate as like owner occupied multifamilies. There's so many the real estate track has so many infinite things that you could do with it, that my thing is you just have to be interested in that track. So we did ask that you go back and think about which one of those tracks that you wanted to choose. And then again, you got to kind of think about time. Do I have time? Do I feel like this is something that I want to get into? And again, like I said, think about things that speak to you and things that make sense for you. Those are the ones that you want to get into. So let's just roll into this week, which is what am I going to do with the refund? So now that you've picked your track, how does that fit into your refund? How are you going to take your tax refund and be able to create some type of additional cash flow or a revenue stream? And I want to reiterate, every week I talk about this, is that the most the largest thing that people spend tax refunds on is paying bills. So everyone, all clients, most of them, not everybody, but most clients, when we surveyed them, they said that they use their tax refunds to pay bills. And part of this challenge is to challenge you not to do that this year. You got bills, so you got to get them paid. But what we're trying to do is to say to you, hold off on paying that bill, use the money to create, because this is what happens, right? We talked about this. When you pay that bill, the money is gone, right? You have now given money to someone else and their business or their service, if it's for something, that a product you need. And now that money is gone. You'll never see it again. It's not an asset to you. There's no value in it. If it was a bill, that means it was a liability and you had to pay off that liability. So now do that, but you don't have any asset in it, right? So one of the things that we talked about was, instead of spending the money on a bill, what you do is use the money to create additional revenue streams and cash flows that are infinite, so that they keep producing. So if you spend $5,000 paying bills, you'll never see that $5,000 again. But if you use that same $5,000 to purchase a rental property, to start a business, or to invest in stocks, any of those three, then what happens is that same $5,000 will then create more additional money that you can then use to pay off your bills, and then continuously, have that money in order to continuously pay off bills. So it just gives you an opportunity to create an asset with your tax refund that belongs to you, not to the bill collector. And then that money is then used for you to continuously take care of your liabilities without losing your asset. So anything that comes out of the 5,000, you can use, and that's just an example, you can use to pay off your liabilities instead of blowing it by paying for it up front. So this week, what I want to tell you guys is, once you've picked your track, now you have to kind of narrow down the budget. So the next thing is, if you we'll give an example. If you chose business as your track, then you have to get into what type of business. The other day I was looking for a braider. So I have a person that braids my hair, but I was looking, to see what else was out there. Should I try someone else? And I was just noticing, like, the braid market is, at least here, I'm actually in Houston, and their hair market and braid market is out of control. Like, I seen that some people were charging, $350 for knotless, and $400, for different things. And I just thought about that, and I was like, wow, for someone who knows how to braid, what that would be an amazing business and opportunity to add to their assets if they created like a business in hair. So anyone, I would encourage you, if you're on that track and you have a skill like that, then you could consider even doing it over the weekends. Like you could just say Fridays and Saturdays, you know what I mean? Like I'll do um two heads, that's $700 a day. That is $1,400 just for a Friday and a Saturday. So to me, that's amazing, like that is an amazing income. It does have sweat equity, so you do have to give a lot of time to it, but to me, I don't see that as something that can't be done if you have that skill level. And you could also spend, so to me, this is what I'm saying, instead of spending your tax money even on uh a bill, then you could even use that on educating yourself. Let's just say you don't know how to do not list, but not list, you could charge more. You could spend that money on, doing a class on not list that now you can end up charging more, and that class will pay for itself. So these are the kind of things that we want to think about when we think about what we're going to spend our tax refund on. So let's go back to that. So you have a hair braiding business, and you have, let's just say $2,500, and I'm not going to say exactly what you probably need in terms of startup costs for a hair braiding business. But if you want to get into it, then we have a great budget that on our small business consultations on jittax.com, you can set up a meeting and we'll go through the business budget with you so that you can come up with what exactly it would cost you if you wanted to open up your own hair braiding business. And of course, it's different by state, so you have to check with your state to see what type of licenses you have. Could you do it in your home? Would you need to rent out? All of those things are a case-by-case basis, but all doable. So I'm just going to use the $2,500 as an example. If we did a budget and we came out to see that the startup cost for that type of business would be $25, you do need to put down exactly how much things are going to cost. So how much would it cost to get all the products you need, the hair products, the hair itself? Are you going to, have hair there to sell, or will your clients, like all of those things are part of the budget. So the budget always tells you what you need to start up. And then, you start talking about revenue. So how much could you make? And then this is what I was saying to you. You got to be able to say how much time you have towards it. And then you pretty much add those things together. So if you know that you can make $1,400 every weekend, maybe you want to, do it twice a month, for every other weekend. And then that is $2,800 a month in income, guys. That's every other weekend, $2,800. So to me, that's a great place to start if I was on a business track. And the only thing you need to do to make sure that you can keep the $2,800 in your pocket is to be able to create that budget and see how much you're getting in. Because remember, we don't talk about numbers based on the 2,800. We talk about numbers based on the net. So after expenses, after paying, taxes, if there are any, after purchasing products and things you need, what do you have left? And whatever you have left is, what basically additional income you have made. Let's just say that $2,800, you end up making $1,000 net dollars a month. So if you think about it, how many months would it take for you to make your investment back? So remember, we started off with $2,500. So if I'm that braider, I'm making my $2,500 back in 2.5 months. That's all it's going to take me, is 2.5 months. And guess what? Once that 2.5 months is over, any additional income I make from there, that is now my cash flow, and that is now my net income. So this is how I'm trying to, let you guys know that's how you figure out your return on your investment. That's how you figure out, how am I going to make money from this, and how is using my tax refund going to help with that? So if we took $2,500 for the tax refund, started the business, started doing hair in 2.5 months, we would have made our money back. And now everything after that is additional money that is coming in on top of the 2,500 that we invested. So that's what you guys understand. So anything after that, you can use to, reinvest in the business, because you always have to reinvest, or you could start using it to pay off those other bills. And remember, as long as you keep the business going, then your business itself is an asset, because now it has the opportunity to continuously grow and bring you additional revenue. So, that's basically what you should do with your tax refund. You don't want to spend your tax refund on items that are not going to add value to you and that are not going to create assets. So again, when you choose your track, you want to do a budget first. Even when it comes to choosing what type of stocks you want to choose, any of those things, those should also have a budget. Because if you want to capitalize or maximize on investments, there's certain ways that you should handle that. So if anyone has chosen their track, then it's time for you to set up your business consultation so that we could go through your track individually. And you can visit the JIT website at jittax.com to set up that consultation. If you have, so by now you should have the amount of your refund that you saved for the challenge, and then you should have chosen your track. And so the next step is to create that budget and to be able to really know where that money's going to go. Remember, in week 2, we talked about the fact that you should know exactly where your money goes, down to the T. There should be a plan for every single dollar. So that's pretty much what you want to do, is have that idea by the budget of where you're going to spend that money. Then once you do that, we could also talk about tax advantages of your track, and what type of licenses you need, all of that stuff to get you started. So I'm hoping that people are excited and that you're on track with choosing what you're going to do with your tax refund. I know the money is like a burning in your pocket or your bank account. I know people have been wanting to spend. I have clients calling me saying, well, can I just spend this to do that because I have this to do? And I'm like, no. I'm like, please just wait till we get finished with the weeks. We got 2 more weeks to go. And next week we're going to pick, a track, one of the tracks, and we're going to we'll have more visuals and stuff like that to break down what it looks like. I'm going to try to choose one that someone has already chosen, and we're going to really follow that and see what it looks like in terms of the budget, in terms of cash flow, and you'll really be able to see what investing your tax refund can really do for you. Again, if you haven't joined the Facebook group, I encourage you to go on JIT Tax and join the group Flip My Tax Refund. And, we might have some questions in there, some other content that you might be interested in. It also has the videos, the live videos. You can see the live videos on YouTube as well. So we're always, encouraging you to send in your questions or anything. Okay. All right. So thank y'all for joining me this week, because I was very excited to talk about this week. And again, don't forget, so the homework that you have or you had was last week was to choose your track, which is the investment, business, or real estate. And then this week, you want to set up your appointment, your small business consultation, so that you can start working on your budgets and your startup for your business, if you have that. Your real estate consultation, if you're thinking about purchasing a home, then you want to set up that meeting to see where you're at and what is the next steps, that if you're going to use your tax refund for down payments, what does that look like? time frame. So all of those different things. And you can have one in each track. And, if that's good for you, you should do it if you have enough refund to be able to do that as well. So I look forward to seeing some consultations from you guys, and I'm looking forward to seeing some assets created from these webinars. And just give me a call or set up an appointment if you have any other questions regarding any of the information we talked about. And I want everyone to have a great Thursday afternoon. So we will see you next week, same time, 6 p.m. And we'll be going again, we'll go through the scenario. Okay. All right. Everybody have a great evening.